one of the big stories this week, a new credit fund unveiled that is targeted at the upper end of the small and medium enterprises in Nigeria and across Africa. The fund provides both Naira and US dollar window for SMEs across all sectors, even as the fund managers unveiled the local currency window of the credit fund on Monday. Joining me to discuss the new fund and a lot more is the CEO of the ARM Private Credit Fund, Deji Opeola. It's great to have you in the studio with us tonight.
Thank you very much.
Thank you so much for coming. We appreciate it. Talk to me briefly about the state of the private credit market in Nigeria, the debt fund. Why is it important, such a fund important within Nigeria's financial ecosystem and in the economy as a whole?
Thank you. If we look at the SME, which is where we focus on, is the engine of growth in any economy. If you look at the US $30 trillion economy, more than 60% of it is from SME. Nigeria today, with the GDP that we have excess of 84% of our employment coming from SME. About 50% of our GDP is coming from SME. So if you really want to get to $1 trillion economy and beyond, this is an area to focus on. But what do we see? Most of these SMEs, they are too big for microfinance bank to finance, and they are not within the radars of the banks.
Regular commercial banks.
Regular commercial banks.
So they're hanging somewhere in limbo.
They're hanging. So if you talk to some of the operators, they are borrowing at an average of 4 to 5% a month just to keep the engine growing.
A month.
A month. So what we have done at ARM is that we've looked at it that this is the only way by which we can build up this economy. So we pick them up at SMEs. We build them up to become like a roll-up platform whereby we can develop mid-cap companies, which will be a good opportunity for the capital market, either to do mergers and acquisition, to infuse additional equity so that we can grow another set of big corporations. So that's the goal. That's what we want to do.
So technically, you are the midwife.
So to say, thank you.
In the manner of speaking. And I can relate, because if you look at the Russell 2000 index on Wall Street, it's all about the SMEs in the United States. And it's a major index to watch if you want to get into that market by looking at that basket. I wish we could have an NGX 2000 in Nigeria, which will have 2,000
We're
SMEs.
going to build it. Let's start with it.
You started with it. Tell me about the fund. Now let's talk about the structure, the investors, the beneficiaries, and the expected impact.
Okay, so the fund is structured around...
And it's about 200 billion.
It's a 200 billion.
Yeah, give me the headline figure.
So it's 200 billion program, the size. So we are starting with Series 1, which is 25 billion. We launch on Monday. We are going to close it February 18th. So it's targeted around institutional investors. So it's a 10-year fund. Having said that, we also create an opportunity for partial or early redemption of up to 20% of the AUM. So it's like you are eating your cake and you are having it. So in terms of pricing, so as to create impact, we price it along FGN 10-year bond. So today FGN is about 16.83. So we put a spread of about 300 basis points on top of that. So if you look at that, you are still sub 20. And by the time you start your base at sub 20, even if you put additional basis points on it, it's still below the NPL rate. So
which is 27.
Which will makes it easy to lend to the SMEs and to grow very well, because most of them have very thin margin. So when you are running businesses with thin margin, cost of capital should not be that high. So that's the structure of the fund. We lend across every industry except for primary agriculture, which needs a particular dedicated structure of funds. So
industry, manufacturing, energy,
yes,
fintech, digital.
We like women-owned and women-led businesses.
Oh, I love that. They
are engines of growth. If you look at our economy, about 40% of the businesses that we have, they are women-owned or women-led. When we did launching, we brought a CEO of one of the companies that we've profiled for our investment, a plastic recycling company run by a woman out of Ikorodu. This is a business that is 100% Nigeria input in Naira and over 80% revenue in dollars and pounds. So they recycle the plastic in Ikorodu and they ship it to Walmart, Tesco, in the United States and United Kingdom and bring money. So this brings about FX.
So raw
FX is not only about dollar.
Naira.
FX is not only about oil and gas.
It's about non-oil.
Yes.
So this company just gets its raw materials, everything here in local?
Yes, 100% Naira.
And 100% Naira?
Yes.
And the inflow
FX.
is, that sounds like music to the ears of
we have those companies.
The central bank.
Yes.
The government will not love that.
Those
we
are
want to see more companies.
Of that. Yes, so that's what we want to do. This is a small company. Can we build series of those companies and build it up in roll-up? So as we have it in that area, we also look at healthcare, we look at services and the rest, so that we can build up the engine of growth for our economy.
Interesting. So is there an idea of what the size of the SME should be before it qualifies for this fund?
Sure. So we don't deal with startup because it's a different risk profile. So we look at companies that have been around for at least 3 years as a track record of generating free cash flow. So in terms of financials, we look at it in terms of earning before interest, tax, depreciation, and amortization, EBITDA, because they have different kind of margins. So we don't look at it at revenue size.
Okay.
So we look at EBITDA between 500 million up to like 2 billion in EBITDA, which will give us a sort of leverage of 3 to 4 times.
So you show some level of cash flow is there, some level of liquidity is there.
Correct. Our single obligor limit is 5 billion. So
for an SME.
For an SME. So we really, really want to build these organizations. And we lend both the revolving credit facility and term loan facility, because most of these companies, what they need is ability to have liquidity for working capital. So the revolving credit facility will provide opportunity for the working capital that they need, because some of them, there is a problem of their receivable days. So if you have payable that comes quickly than receivable days, you don't have liquidity in the business. So we want to solve that solution. Then the second is to catalyze their growth. You have one line of machine that you are using to produce. Can we give you another line to have a multiplier effect? So those are 2 key areas that we focus on in terms of debt offering. We will look at opportunistic mezzanine, but most of the companies that we see, 80-90% of them, what they need is revolving credit facility and term.
Funding is an issue for, and I'm sure you're a member of the African Venture Capital Association. You see the bigger picture. What are we talking about here on a continent-wide association? Just give me about a minute.
So if you look at it, in terms of funding in general in Africa.
For SMEs?
For SME, we have a gap of excess of 400 billion. USD. And up to today, if you put the funds that has been raised, the AUM together, is less than $3.5 billion. Yes. Nigeria alone has a need of about 32.2 billion in order to fuel our SMEs. So we are still very, very at the beginning. We are just scratching it. If you look at the global picture, there's about 3.5 trillion in private credit.
Ooh.
And 70% of it, as you can guess, is in the US, 20% in Europe, 7% in Asia. So between Africa and the rest of the world, we have 3%. That 3% is about 105 billion, but we only have 3.3.
So you still have Middle East,
yes,
Latin America,
yes,
and others
that have
taking a chunk
of it. We only have 3.3. So we need to build this.
And you think this type of fund by ARM will support growing SMEs towards the AFCFTA, which is very important.
Correct.
Here. Is that something you consider?
That's it. If you look at most of the SMEs, some of them, what they are producing is an input into another production in one of the African countries.
Yes.
So if we are able to do this very well, we'll be able to push connectivity across Africa, because that's what we need to do. So if we build the SMEs here, it will touch Ghana, it will touch other places. And we have 2 funds. So what we have just launched is our Naira fund. We also have $200 million fund, which is going to cut across sub-Saharan Africa, outside of South Africa. So we believe that with that, we'll be able to touch other countries that are across Africa, outside of the Naira. The dollar also is available in Nigeria, but is only available for companies that generate dollar revenue.
Okay.
Yes.
Like the one in Ikorodu, for example.
Yes. Like the Ikorodu.
So they can use USD.
Yes.
Because they generate. So it's dollar to dollar.
Dollar to dollar.
And that, you think, reduces some of the risks in currency risks involved.
Yes.
But again, you're looking at the macroeconomic environment. What's your outlook? Let's begin to summarize your outlook at ARM for this year on the macro side and on the monetary policy side, interest rate, inflation rate, exchange rate, and how would that likely impact the fund?
Okay. I think this morning we saw that inflation is already trending down. So that's good. We believe that the central bank, we have to at some point look at where the MPR is and make some cuts. We don't know whether it's going to be 1 or 2, but there should be some cuts. There could be some cuts this year to trend along the inflation, because the lending rate, the higher it is, the economy shrinks. So there have to be liquidity in the market. So we look at that. In terms of the FX, it has been stable. It's even strengthening. So we've gone past the 1450. We're at 1419. We believe the policies that this administration put in place is coming to show effect in the economy, and we believe that it's going to trend along like that. Yes, we are going through to election. There will be some bumps, but we think that we are pretty much at a stable level. And this fund will also help to refuel the economy, especially from the SME point of view.
I think there should be some level of liquidity as we get into election year.
Yeah, there'll be liquidity in the system. So as we get to the election year, election campaign requires a lot of money. So there'll be a lot of liquidity coming into the election year, as we go into the election year.
All right, we'll touch base with you as soon as this offer closes, and then begin to see how the market responds to that. But we wish you all the best.
Thank you so much.
It's good to have you here. That conversation with you on the private sector market and all of that. That's the Opeola, the CEO at ARM.